Hey investors, this is Chris back with another video teaching you how to invest responsibly, and in this video I'm going to explain why I personally believe that the stock market is poised to make a huge move higher in the coming weeks and months ahead. Now I'm going to do this responsibly with facts and analysis. I'm not going to share any pump and dump nonsense with you guys, but some real information to show you why there are so many reasons to be bullish out there. So make sure to like this video, subscribe if you haven't already, and let's get started. So there are three main reasons why I am very bullish about the stock market over the next several weeks and months ahead. The first one is that so many excesses have been taken out of the market. Whether it's, retail investors or even hedge funds that were extremely leveraged and chasing a lot of momentum stocks. There are so many stocks that were just going up way too fast, and there are so many unprofitable and story type of stocks that had no business being at the prices that they were at. For example, in the EV space, right? These are companies that are going to probably do well over the next 5 or 10 years. But, in the near term, did they deserve to be worth 5, 10, 15, 20 billion dollars a piece? No, because they have no product yet. They barely even have a business model, some of these, right? You look at Ride, Lordstown Motor, fake orders, cut their guidance in half, etc. But at the time, that was trading at a really high price, $20, $30 per share. You had Nikola at one point trading at $70 per share. You had CCIV trading at like $70 per share. Did that make sense at all? No, right? They were at extremely high valuations. A lot of stocks trading on prices, price to sales alone, only on revenue. In some cases, there were no revenue to speak of. Then of course, at some point, there's going to be a reckoning. And unfortunately, there were a lot of people that are caught up in that. It's very good now that that money has come out of those stocks. Maybe those stocks will have a chance to grow into the valuations now. And that money can go into other stocks that are probably more deserving of it, right? Like the profitable stocks or the growth stocks that do have more immediate revenues and income coming in the near future. So besides the EV stocks in general, you have the SPAC stocks, that have been totally murdered and desecrated. And, ultimately for good reason, because SPACs at the end of the day are, holding companies that plan to bring other private companies onto the market. They start off at $10 per share. And it's basically like getting in an IPO, right? Except a lot of those SPACs, some of them are just not really good quality. There were like 100 or hundreds of SPACs that have come on to the market in the first 3 months of this year, and then it totally evaporated because no one wants to really bring a SPAC on the market now, because a lot of those companies are just they're not really that innovating, or they take 5 years again to generate some sort of revenue or income. And in the beginning, this was easy money. You buy a SPAC at $10, it goes up to 20, it goes up to 30, it goes up to 100, and it's a no-brainer, right? But at the end of the day, did it really deserve to go up two or three times or 5 times or 10 times just because they're bringing a company to the market? No, right? So again, that was easy money. It's kind of dumb money. I've invested into a couple of SPACs, but I do believe the ones that I am in, like IPOE right now, do have a real fundamental business, and they are generating profits while they are growing 30, 40, 50% a year. It's very different from some of these SPACs. They don't have a target at all, or they're a company that is not going to create any real revenues or real profits for a long time. So that had to be cut out. And lastly, when it comes to stocks that are in the growth category, some of them are not even SPACs or not even EVs, but they're more like just the pure super high price to sales companies, the software type of companies, some of the gaming companies, like Unity, and even some of the newer IPOs, right? Like Snowflake, Poshmark, for example. All of those have now come down about 50% from their all-time highs, if not more. And then you have some of the Cathy Wood type of stocks too, ARK Invest type of stocks, like Teladoc, that have gone down tremendously. That being said, right, I do like a lot of names in this space still, like SE, for example, that does trade on price to sales. because over the long run, growth stocks will get you a better return for your money. They're innovating, their revenues are doubling or tripling, and at the end of the day, ultimately they will have those profits, but it takes a lot of patience. And like I said, you don't want to invest at an extreme starting point where there's no chance to meet that valuation in the future. So now that a lot of these got cut in half, or 60, 70, 80, 90%, then it gets a lot more attractive. So going forward in this bull market, you have a better opportunity now at this price level to get a good return. The second thing that we need to be very bullish about that not a lot of people are emphasizing here is that profitability and revenue beats when earnings are reported is pretty much at sky high levels, right? I believe the average beat over the past quarter was over 20% in terms of revenue, in terms of profit, okay? That is huge because, when analysts are expecting you to make $100 and you make $120, then a whole shift needs to happen as far as price targets and as far as how bullish people are and how much hedge fund managers are buying into the stock market. A lot of people are, kind of spreading FUD, fear and uncertainty, and, doom and gloom. Like the stock market's going to crash to our all-time highs. How much higher can we go? But if earnings continue to go higher, revenue continues to go higher, and these are trends that we can expect for the next several years, especially in growth stocks, then the stock market's going to go higher. And something that ties into what I meant in point number 1 with excesses being taken out of the market is that right now, with all those catalysts and stimulus and good earnings beats, is you're actually seeing the re-rotation into those growth names already. You see a lot of those stocks have made double bottoms. They hit some pretty significant support levels, and they're bouncing from there already. You're seeing inflows once again. You're seeing call buying. You're seeing some excesses starting to come back into the market actually, which might not necessarily be a bad thing right now. If it gets to some crazy levels once again, then the stock market might pull back once again. But we're starting off at a low base, and we're starting to see some of that money coming back in. You look at SE, double bottom, Futu, double bottom, Tiger, double bottom. You look at a lot of those, growth names, Square. You look at Facebook making new all-time highs, Google making all-time highs. There is a lot to like here, and there's still a lot of upside to go if you look at some of those individual names. And also, I forgot to mention in terms of excess, you do see cryptocurrency really pulling back very significantly. Bitcoin has gone from about 65,000 to about 30,000. Dogecoin, that's self-explanatory. A lot of those are coming back down to more reasonable levels. There always needs to be a reset before the next move higher. All right. And so the third thing that we need to really consider here, the third final reason to be bullish, in my personal opinion, and I think the stock market is going higher, is that there's still a lot of skepticism here in the market. So it's not like everyone is bullish, and a lot of negativity has been put out into the market, but it still survived, right? So it's one thing where we're at all-time highs and everyone is super bullish and no one is saying nothing's wrong and everything's in terms of valuation is crazy high. That's not the case here, right? We had scares with inflation, with bond yields, which has been going down, by the way. Everyone was saying yields are going up to 2%, 3%. I don't see it yet, right? Inflation is going to go crazy. Everyone's going to, everything's going to go sky high, but we're starting to see some of those commodity prices start to come back down a bit. The Fed is not budging. The Treasury is not budging. They want to continue to prop up this market. And when it comes to capital gains tax raises and, investigations into the big tech companies, for example, there's been a lot of talk. There's always been a lot of talk, but nothing is passed yet. And I think that the ultimate deciding factor in the stock market, it's going to be, at the end of the day, the fundamentals, the revenue, the profits, how well these companies do. And I think these companies will continue to grow, and we're at a really good point in time for these companies for the next several weeks and months, and really in the next couple of years. So that's my thoughts on the stock market going forward in 2021. I'd love to hear your thoughts as well. Again, the three main reasons to be bullish: a lot of excesses have come out of the market, a lot of valuations are a lot more attractive, You have earnings and revenue beats that are off the charts and so good over the past quarter, and they're expected to continue to be very good in the next coming quarters. Third thing here to like about the stock market is that there is still skepticism. There is a lot of negativity that is out there, but the stock market is still continuing to grind higher, and we have a lot of positivity that is backing the market in terms of the Federal Reserve, in terms of the Treasury. And by the way, I didn't mention this before, but COVID is really coming down, and as vaccinations continue to roll out, there's only positivity in the economy and with employment. So I like the stock market going forward. I will continue to invest, and I am not going to let negativity get the best of me here. Until next time, my friends, stay well and invest responsibly.